Hello everyone and welcome to this video. It's just after 10:15 GMT time in the UK. Today I want to look at the euro dollar. I know it's going to be helpful for my members who follow me and lots of people on TradingView. I'm going to stick this one on YouTube as well. I've started uploading there. But guys, I've changed the colour of the arrows. I know you don't want that boring red one every time. But really the point of this one, you can see we came right off these lows. We called it long, took it great, gains out fine. We looked at this level for exits and some light shorts because of market sentiment. And that leads me now on to the key part of what we want to talk about today. Now you can see we had one green candle, two green candles, and I'm doing this on the first day of the month, okay, 1st of December, because we're now seeing a further push and this new month is opening higher up. Now, if we've slammed into resistance, okay, which is quite key, why is it that we didn't ping away? And why could we have anticipated those early exits that we took? Now, the answer is simple. And I go on about this and on and on and on and on, and I will continue to do so until everyone understands what I'm talking about, because I seriously believe this is probably one of the most important things, if not the most important thing you can learn. And that's because it will stop you getting blown out, okay? And there's two reasons for that. Number one, if you took a short and you thought, you know, I want this massive risk to reward and I want it now, I believe it's going to fall a million miles away, and I know it's going to happen because we're hitting into this key resistance. But I haven't checked the news. On my screen here, I've not looked at the news. I don't care about that. I just want it to fall. Now, of course, I believe this is a short zone and you should be out and taking light shorts. But your exits on the shorts are going to depend on how harsh the market sentiment is. And also how harsh the market sentiment is going to dictate the size of your positions, or at least that's how I like to do things. Now, the reason why you're not seeing a fall straight away and you're pushing further into this resistance, which I believe is going to get a little bit tricky, and you'll probably have a few bounce backs in between, and you can take scalp gains on this. And if you need to hedge lightly as well, you can do that. But basically, I think we're ramming slightly high. But the point of this video is if you checked the news and you knew that that dollar is getting weaker and you've seen everything building up to this, and that's why you're pushing up and up, you probably could have anticipated the fall a little bit better, and you could anticipate perhaps if you were using a stop loss where you were going to put it, right? Because if you put it too close, you'd start to get closed out now. If you were looking for a short and a massive move, okay, that again would be problematic. So I do believe this will dip back. Absolutely. It's a technical short area for sure. And, you know, there's no dispute on that, okay, as we peak up here. But I did say, building up to this, yes, we've hit it, but I don't think we're going to rebound immediately. There's a lot of price action in the way. Okay, you can see minor levels here. And that's why I said, given the close proximity of the price action levels and the market sentiment, you know, we may ping straight back up. But we might then get stuck again. And that's what we're seeing now. So you would have had to keep your eye on either me or, in a better case, because you need to do these things on your own, the market sentiment. Okay, because you might have stuck your short exit down here, okay, or let's say down here, because that's what you fancied and you haven't hit it, okay? Now, I only want to take things long when there's good market value, so I want to dip back, and I can start to scale in the market lightly and add as I go on down because I'm gaining market value. But that will only come when there's a change in market sentiment, which is probably going to happen because you're not likely to get this go all the way up in one swoop. Okay, and I mean in like a month. That's probably not going to happen. If you look at how long it takes to come down, look at all of this. You've got all these levels to break down. Okay, so you have to hit these, bounce away, hit these, bounce away. Unless you've got extreme market sentiment tomorrow or fairly soon, then you would rip through, but it's not as likely. And we want to trade on probability, guys. That's what makes money in the market. So we'll probably have to break all this down. So anything higher, likely short. Anything lower, I want a lower value so I can get a good deal, pretty much. So that's your update for the euro, guys. Keep an eye on market sentiment because it's going to enable you to take better exits and position yourself much better in the market. If you know that the asset you're trading could keep pushing into a level, because of how strong it is, you can change your risk, okay? And therefore, you're more likely to be profitable. So these are really simple things. I have way more on this, of course. Look in the signature section below, and it will really help you out. Thanks for watching, guys. Hope that helps. See you in the next one.